Okay, so let us understand the solution from the example. But before that, we will draw our accounting cycle. Accounting cycle depicts that there are series of events after the financial transaction execution. There is a series of events through which every financial transaction goes through and reaches the destination of its balance sheet. However, this seems very traditional, okay, but still it is the case in accounting as a subject. Okay, now let's start our process. First of all, in any business entity there is a financial transaction which involves finance, which involves money. Okay, because before recording everything, before preparing financial statements, there needs to be a financial transaction which is to be recorded first of all. So this is the first step. Please now write it down too, so that you can revise it before exams, or you know sometimes whenever anyone asks from you. So financial transaction, then what happens when there is a financial transaction, how to keep a record of it? There is a voucher. Okay, there is a voucher. It's like a receipt, just a general receipt type. It's a paper form receipt. So every financial transaction executed will be recorded on that paper form receipt. Okay, now after financial transaction there is a recording of transaction. Because until and unless a financial transaction will be recorded, the financial transaction executed will be of no worth to entity, because it has been not recorded. So there will be no proof of financial transaction in the business. Okay, and how do we record it, where do we record it? Let's also understand. I'm going to rub this out, okay, to make clean diagram. So we record in journal. Okay, followed by that, after preparing after recording a series of financial transactions, okay, a series of financial transactions, we post them to different types of T accounts, or T accounts we can say ledgers. Okay, now what happens in the ledgers? Let's say suppose we have 100 of financial transaction. These will be recorded in the journal, 100 transactions. Followed by that, we will post those 100 financial transactions to ledgers. A ledger is in a form of, you can also take it as a diagram. I'm just making a bracket. This is a ledger form. Like there is a debit, here is some debit items, here are some credit items. That's all. We will discuss it later on when we will face such problems. Okay, but for the sake of understanding, just take a note of it. Okay, after posting we have summarizing. We have a summarizing process. Although I've written summary, okay, how do we summarize the ledgers or posting process? Okay, we do it through trial balance. Okay, the trial balance is a summary of balances of all the accounts in a summarized form. Like we have names of the accounts, and against that the amount has been written to reflect that what is the debit or credit balance of every account. Okay, so it's a summarized form. Followed by that, we have a final steps. We have a final step of financial statements. Okay, okay, so that is what I have written. So the first one is financial transaction execution, third is posting and the process through which posting will be done, or we can say the activity is making ledgers through which the posting activity can be done. Followed by that, we have to summarize the ledgers. So we will use trial balance to do that. After that, we will prepare financial statements by trial balance. Okay. Now, in the given question, we have been asked that which of the main source of information used to prepare the financial statements. So now from this diagram we can understand, or we can clearly correlate that trial balance is used to prepare the financial statements. So the correct choice for problem 40 is C, that is to say trial balance. Okay, you need to make sure that you will jot it down what I have written on the first sheet, so that it will be easy for you to revise before exams. Okay, that's all for your solution. That's all for your solution. Thank you.